Hi, hello and everyone. This is Shiva from scalperpros. In today's video, we are going to be looking at where one should invest. Talking about that, you have multiple avenues where you will be able to invest your money. There are fixed deposits, there are equity markets, mutual funds, cryptocurrencies, and last but not the least, real estate and the bullion market. But the latest one which got added is the cryptocurrencies, and many people wanted to invest in that. In today's video, you are going to be seeing where you can invest your hard-earned money. Talking about where you should be investing your money. Yes, many people who wanted to invest in a safe returns try to do it in the FDs. Talking about FDs, those are usually backed by the government, like an RBI or by the government of India. In those scenarios, your returns are going to be very minimal. Some will be getting 3 or 4% returns, or if you're looking at government bonds, you might get 5 or 6% returns. But the most important thing is your money is going to be absolutely safe. But not many wanted to go for 4 or 5% returns, right? Why? Because the inflation is already at 7 and 8. Looking at down the year, whatever the money which you're going to be earning from the bank or from the fixed deposit, you needed to be spending it on the inflation part. So many people doesn't like their money to be parked in the fixed deposit. Then where is the next set of avenues comes in? Real estate or the gold. These are in traditional areas where the people tend to invest their money, right? So real estate, the major problem is if you're going to be getting the right property, yes, it's absolutely fine. Imagine if you get into a legal problem or if you get a property which has legal issues, then you will not be able to liquidate it. Instead, you needed to be going for the court to get this cleared out. The third one, in terms of the gold, what is the advantage of investing it in the gold and the silver? You will be able to liquidate it. But even here, the CAGR returns over the year has been around 8%. Is it going to be enough? But many people in India, we have a tradition that we accumulate gold and then we keep on accumulating gold. But in the long run, someone who wanted to consider that as a savings, absolutely not. Gold will not be the right bet. Why? With new cryptocurrencies which is emerging across the world, gold is losing its shine slowly. But I wouldn't say that is going to be happening pretty soon. But you may never know what is going to be dominant in the next century. So as a feature, Bitcoin has been going amazingly well from $1 to almost $50,000. But in India, RBI has been a little skeptical in terms of approving it, and government also coming up with a new bill wherein they don't want to encourage any other cryptos other than the ones which is going to be backed by the government. In that kind of an environment, will I be able to go and invest in Bitcoin big time? I wouldn't be doing that. I will wait for some time to get a clarity on what the government is going to be doing with the new bill which they are going to be proposing for. Once they do it, then we will get a clarity whether we'll be able to invest in international equities or international in Bitcoins or the domestically one which is going to be formed by the government. So with all these things are ruled out, real estate, yes, if you get the right property, you will have a good rental income. You will be able to get a commercial asset value also going up. But in the long run, will it be sufficient for you if you are not able to find the right an asset? The major problem with the real estate is you will not be able to liquidate it when you wanted it. And that's the reason many people look at the equity and the mutual fund and the stock market. Talking about the equity is getting into buying in shares in a particular company. So many people buy it today, hold it for their kids, hold it for their grandkids, wherein they will be able to create a massive wealth. So that's important, guys. And most important thing, equities can be liquidated at any time because it is going to be sitting in your demat account. And as and when you see the asset prices going 50%, 100%, you will be able to liquidate it as well. But one caveat here, this is going to be a risky asset. High risk, high returns, low risk, low rewards. When I say high risk, high returns, it is going to be into the stock market. Low risk, low reward, we are going to be talking about the fixed deposit. On the equity front, if you're going to be investing in the equity, three things which you needed to be looking at. You needed to be looking at what is the time frame which you're looking at, whether it is going to be long term or a short term. If it is going to be long term, you will also be getting some benefits from the like in government in terms of the taxes is not going to be similar to like in what you're going to be paying for the individual taxes. If it is a short term, yes, you will be paying like in 15% taxes. But we will be doing a detailed segment on how you needed to be looking at the long term and capital gains and short term capital gains. Talking about the next one, the mutual funds. Mutual funds is like a safe bet in terms of looking at the risk asset which you have it in the equity. Equity, when you're directly deploying your money in a particular share, you will be able to get 10, 20 or 50 or 100% returns. Whereas in the mutual funds, they will be diversifying your funds into several companies wherein you will be getting like a 10 to 15% or 20% based on your risk appetite, whether it is going to be like in a small cap, medium cap or a large cap. In that scenario, choose what is suitable for you. The best is someone who is getting into the market or someone who wanted to invest at a young age. This is the right time wherein you can use a systematic investment plan. The mutual funds offer you a systematic investment plan. Not only that, nowadays equity markets have also started doing that. You can start with like a 5,000 or 2,000 every month based on your savings and then accumulate it. Over a period of 2 or 3 years, you will see a big CAGR growth of 30 to 40 or 50% based on the market moves. Again, it is all decided based on the market moves. In the next 2-3 years, if you see the market tanking for another 30-40%, you will obviously feel your portfolio also going down the hill. Don't worry, if you are a long-term investor, look at investing in the quality companies, you will definitely be able to see a massive wealth creation in 5, 10, 20 years. Rather than buying a home today and paying the EMI, instead of that, if you accumulate and pay the EMIs over a period of time, you will see it. With the money accumulated, you will be able to buy a home without any loan that you needed to apply into the banks. That's right, guys. You will be able to buy a property or like an asset without taking any loan. So start investing right now, but don't put all money in one basket. When I say all money in one basket, don't try to deploy the entire like reserves which you have it in the equity market. The reason is Nifty is trading at lifetime highs and the world is at a precarious situation in terms of the yields going higher, the dollar index going higher, the money is going to be going out of the emerging markets and so on. Try to invest in a diversified portfolio. Say for example, if I'm going to be investing like in 50 to 60% in equity, 10% as cash, 10% in like in gold, 10% in like in other mutual funds, you can diversify your portfolio so that even if the equities doesn't perform, you will have some backup reserves for you to depend upon in case of a time of a need. So, that want to invest, you have different avenues which we have shown it, but in the upcoming videos, we will also be explaining you how you can maximize your profits in terms of short term or a capital, like a long term, or at the max, you can also look at how you can invest into the mutual funds as well. Hope you guys would have liked this video. We are going to be doing more such videos in the future, which is going to be helping you and taking on right trading and investment decisions. Thank you all so much. Do subscribe, like it, and share it with your friends, guys. Thank you all so much.